Okay, mate. So let's look here. TA on LTC for short position. You believe I said it was going to 88. No, I think it's already dropped. I was away for the weekend. It was Valentine's Day. I had to take my missus away, all that sort of stuff. But I did post up and around here. It did go slightly higher and we got that stop on, but I did post, I don't know if you check the group, I think we were just below this previous high in there somewhere, that I says that it's starting to look like a bit of a short that will probably want to drop back down and fill some of these wicks. Well, yeah, this large wick here is an interesting prospect. Is it going to flush and come down to here? Now that's a pretty bad flush to negate the weekly and come right back down there. That's not great. There is an argument to say that it is bearish for now, until this flips green again. If this flips green again, all bets are off. I'm trying to look for, you can see here, see the small 2-week candle, but it wicked up, and it's not an easy short. So price should come down to fill some of this space below, but it's not the easiest short, is what I'm trying to get at. I'm trying to look for some examples here in the past history. We've not really had any similar rejections after such a strong candle. Like, this is a strong candle. See this candle right here? It is a strong candle. What I'm concerned about slightly is that, yeah, it could drop lower, but you're looking to get a short right now, and it's already dropped 10% from up around here, and more than 10%, obviously 11-12%, but it's only dropped 8% from when I posted, roughly in that ballpark area. But the ideal place was to be shorting up there after you get this bearish stop hunt. So what I'm saying now is, if you short here, it's into that sort of area where we could bounce back up in here before creating a neckline pattern that then fails and flushes lower before going. Kind of like here, right? It creates this base here before you get the wipeout, and then it moves. This looks to be kind of creating some sort of base here. So I'm just trying to say that it may be into a slightly dangerous support line to be looking for a short. The ideal situation for a short is gone. It's missed. I posted a few days ago into this strength in this green candle here that was maybe a short. I was away for the weekend, so I didn't see the stop hunt. I didn't get to watch it. But the safe entry point is gone for the moment. Now, in saying that, there's still a possibility. If you really wanted to short, you could short. But if it flips green again, you got to get out of your short. It should not flip green again if the market is bearish. The truth be told, because this is a base, because this is a strong candle right here, yeah, there was a short up there, but it might actually be safer to wait to buy down here and look for a buy point or look for some strength down here. It's not an easy short. You could short now and have 3% stop loss up here, but there's only, how far is it actually going to drop? If it's going to drop down into this ballpark buy area here, yes, it is a nice short. Yes, 10% down, 3% risk if you wanted to take it. If it flips green again, you got to get out of your short, because that's a sign of strength in a potentially strong pattern. My other concern, let's look at this. From memory, the monthly was red. Yeah, so that's the thing. There's 11 days left, right? You can see here this similar candle. It went higher before dropping again. But the thing is, price should drop and fill this wick somewhere, right? It should fill this out a bit. If this was the start of a new month, I would say, great, okay, well, now we have a safer short position that, what you want to see is, you want to see price slightly move higher first, and then start rejecting for you to short into. That way you're shorting into the momentum. Sorry, I clicked XRP there. but you want to be shorting into the momentum. The big question is this candle going to finish with a wick, or are we going to continue to drop now? So if this happens in 11 days time, that will give us short opportunity, but the problem is we're 11 days away. So, you know, just keep this in mind for future. If we finish up here somewhere like this and there's a red candle, you know, be on alert that a small bounce could be a short on a new month to fill this wick somewhere. But, you know, a 9-week candle, I have to say that there is a lot of potential in this 9-week candle. There's 20 days left, right? But if we end up closing and there is dips, those dips that I was talking about on the monthly look like buys. Sorry, on the monthly, they look like buys to then push this higher, right? This is a decent pattern because of the fact that we've consolidated for 2 years, more than 2 years, right? 1 year, 2 year. This is the 3rd year. This is a 3-year base actually. I didn't know if it was a full 2 years. That's May, so it's 2.5 years. But so you can see that with this is a breakout, this is a retest of the neckline. Well, then this should break up if this is a true real breakout. So it is suggesting that the dips are the safer buying opportunity rather than to look for the short. Considering the short opportunity, it has already dropped 10%. Now, if we do look here at a 5-day chart, there is a bearish 5-day stop out, right? So that is not ideal for the bulls right now. What it does say is that if price gets above this white line at 133, it then becomes bullish again. For now, this is a rejection, and you know there are many days left. 2 days, 8 hours. Yeah. Well, it is suggesting that bounces here are shorts to go lower a little bit. It is also a 3-day bearish stop hunt. So what I will say is, if you really want to short LTC, I would use a 3-day candle, and by using a 3-day candle, I would do something like this. Something like this on a new 3-day, because this is a bearish stop hunt here. It is a red rejection candle. It's created wicks here. So bounces on a new 3-day to maybe fill a small portion of this wick, then flip red, would be shorts to see if this price can drop. And then that would keep your stop loss very tight, at least reasonably tight. That, in my opinion, is probably the safest way to trade this. If it does get the drop, well then, you know, maybe there's that dip there before the move higher to fill some sort of the weekly wick, and then price on a new month or a new 9-week could then move in the right direction, or to the upside, I mean. So yeah, I hope this helps. Will it get down to the 88 cent? That might be a little bit too far, because there is a lot of bullishness in this chart. So maybe don't count on that number, but we need to watch carefully. You can see what this is. This is 98. That's a weekly 98. Did I say 88? That's there. 88 was probably the extreme. But you know, if it starts getting down to the 100, 90 to 100, even 100 to 106, that is a major level on a chart. But yes, it could drop a little bit more if there is a flush. So I hope this helps. Yeah, and I hope you're well. And you became famous for a day on Twitter. I thought that was pretty funny. But yeah, mate, I hope you're well.